Hello, everybody. Welcome to Wiley Solution Walkthrough. This is Accounting Tools for Business Decision Making, 8th edition. This is problem 18-2. Question used in the presentation is copyright 2022 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright by 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. Okay, so let's go ahead and before we thank that bus driver, let's go ahead and take a look at problem 18-2. Okay, so Vin Diesel, right, who's actually bald, owns the Fredonia barber shop. He employs 4 barbers and pays each a base salary of $1,250 per month. One of the barbers serves as the manager and receives an extra $500 per month. In addition to the base salary, each barber also receives a commission of $4.50 per haircut. So other costs are as follows: advertising, rent, barber supplies, utilities, and magazines are $25 per month. Okay, so right over here, so let's go ahead. So they charge $10 per haircut. So determine the unit variable cost per haircut and the total monthly fixed cost. Okay, so let's just go ahead and set this up as like cost, volume, profit. So we'd have sales, units per unit total. Okay. So my per unit here is going to be $10 per haircut for the sales. We don't know how many sales we have yet. Then we're going to have our variable costs. Okay. So we're going to have a commission. The commission is going to be $4.50 per haircut. Okay, so right over here, each barber receives $4.50 per haircut. Okay, the other part over here is going to be utilities, and there's a 20-cent per haircut charge on the utilities. And again, what we're trying to go through and is identify the variable costs. We also have barber supplies. Our barber supplies are 30 cents per haircut. So our total variable costs are going to be $4.50 plus 20 cents plus 30 cents or $5. So our contribution margin. Okay, so this is basically going to be $10 minus 5. Let's go ahead and get over to the fixed cost. So what we have over here, we have each pays each a base salary, 4 barbers. One of the barbers serves as the manager, receives an extra $500 per month. Okay, so manager is going to get $12.50 plus 500. 3 other barbers are going to get $12.50 times 3. Okay, in addition to this over here, so that's again $12.50 per month. This is $1,250 times 3 is equal to $3,750. $12.50 plus 500 manager fee is going to be equal to $1,750. That's where these two numbers right over here are coming from. Okay. So we also have over here, we've got advertising. This is going to be at $200 per month. We've got rent at $1,100. And we also have utilities. The fixed portion, this is going to be $175 per month. Okay, and let's see over here in magazines. It's going to be $25 per month. So 25, 175, 1,100 is the rent. And then the advertising is $200 per month. And then we got over here, the base salaries over here. Okay. So determine the unit variable cost. So over here, my total fixed costs are going to be $7,000. Okay. So using a CDP graph, assuming a maximum of 1800s in a month, use increments of 300. Okay, we're not going to go ahead and do that. I'm going to get rid of that just because that's something I would not be doing basically in my class. I don't have Excel for my students, so it's something I'm not going to go through and do. But what we can go through and do is compute the break-even point in sales units and sales dollars. Okay, so we know that our fixed costs over here are 7,000. So if I go over here to my ratios, what I can do is I can basically just copy these down over here. Okay, so my sales price per unit, my contribution margin per unit is at $5. So this is basically going to be 10 minus 5 equals 5. My contribution margin ratio is my per unit divided by my sales price of $10 per unit, or 0.5. My break-even point in units is my total fixed cost. I'm going to be dividing this over here by my contribution margin per unit, which is 5. So I have to go here and make 1,400 haircuts. Okay, and then my break-even point in sales dollars is going to be the 7,000 fixed cost divided by my contribution margin per unit. And then so this over here is going to be 14,000. Now, to make sure that this works, right, that's what we always want to go through and do. We want to make sure that if we go through and we come up with numbers, that our net income is going to be what it is, which has to be 0 if we're doing break even. Okay, so let's go ahead and put this over here. So break even. Okay, so we said that what we had to go through and do is in terms of units, we'd have to sell 1,400 units. So 1,400, 1,400, 1,400, 1,400. Okay, so my total sales would be 14,000. My commission, 1,400 times 450, 1,400 times 0.2, 1,400 times 0.3. Okay, so right over here, my total variable costs, again, for the 1,400 units, we add up these three amounts, we're going to get 7,000. So my contribution margin would be 1,400 times 5, or over here, it's going to be 7,000. So my net income over here is 0. So again, this is where we kind of see that this actually goes through and works. Okay. So determine the variable cost per haircut. We've done that. Break-even point in sales units and dollars. Determine net income, assuming 1,600 haircuts are given in a month. So we can really do that very easily. We're just going to take what we have over here, and we're just going to go ahead and copy it. Okay, now if I'm selling 1,600 haircuts, right over here, my net income is now going to be 16,000. This is going to be 7,200. 1,600 times 20 cents is 320. 1,600 times 30 cents is 480. Total of 8,000. My contribution margin for these 1,600 units is still going to be at $5 per unit, so a total of 8,000. So my net income here is going to be my contribution margin minus my fixed cost, or $1,000. So right over here, so determine net income, assuming 16 haircuts are given in a month. So it's going to be $1,000. Okay, so that was fun. And I want to thank Wiley for allowing me to make these videos, as always. And if you want to see other videos from financial, managerial, or intermediate accounting, please feel free to ask for them in the comments. If you have other questions, I may be able to help you, but generally those are like my areas of where I spend my most amount of my time. But feel free to ask any kind of questions you have in the comments below. Look forward to seeing you, not watching you, but you'll be watching me on that next video. Have a great rest of your day.